That's sure I can hear.
Oh, yes, mate. So I was just getting my screens ready.
Where are
You there
you?
in a way? We're not sharing it, are we?
Yep. Don't
Oh, we're
sweat.
sharing.
And don't
We
sing.
are live, are we?
We are live on just about everything on the planet that we can be.
Oh, okay. So not. But are you sharing a screen already?
No, not sharing
Okay.
screen.
All right, mate. Well, how's things? I'll quickly share mine, so we're not talking into blank. But
But
yeah, how's things going?
a little bit rested and a little bit tired. I've been away from the screens, as you know, for the last day and a half. But very, very busy. It's amazing how many people want to buy plants at the moment. Just
Oh, mate,
incredible.
that's good.
Well, it is, except I'm running out of plants.
Oh, you want to charge them more money then? Supply and
Now there's
demand.
not there's an idea.
We need to start
That,
charting this stuff.
no, I'm not like that, mate. I've got to be fair and reasonable. Tasmania is a very small place,
Oh,
and
fair play.
you don't want to be going SH1T'ing in your own nest. That's not a good idea.
Yeah, agreed. I well, hopefully you've had a nice break, mate. We had a pretty decent morning actually. Took a trade on the FTSE 100, which surged to the upside. I've actually taken profit on that FTSE now. Got in twice on it. Got in down here when the market opened up, and then I got in on the break of the high as well because it looked pretty good to me. So had a decent run to the upside. I
Nice.
took it out at 75 pips on the lower end, and the upper one was around about 55 on the upper end. So a really good opening, half an hour or something. In fact, 2 hours it's been. It took me to. I came out of it after a couple of hours because I was just starting to see the market weaken a little bit, and I was noticing that there is this gap here that I was getting a little bit concerned with. Now, that doesn't mean that I don't think the stock market is going up. What it means is that I think that there is enough volatility to suggest that we are probably in day trading zone. So I'm quite happy to take some early profits here and go from there. See what else is on offer. And I wasn't 100% sure about this level, to be honest, as well. I was kind of drawing the line. I thought, well, actually, that trend line might be a little bit tighter, and it may have stopped. So as the market kind of came up, even though my target was my first target was going to be this level, that was because I had my trend line. As I say, it was a bit higher when I first drew it, and but as time went on, I would just start to think, well, the gap is there, and there may well be, maybe this trend line's a little bit lower. And when the market paused there, it suggested to me that the run may be done. It may not, but it may be done. So taking profit there. If it bounces back down here, we'll make a choice on whether we like any more upside. We are seeing that the global stocks generally just easing back a bit, but back to my favorite currency right now. Really like this dollar Swissy, mate. I don't know if you've looked at the dollar Swissy and if it
Yeah,
would
I
be
have definitely.
weapon of choice or not.
Oh, look, I've been trying to trade it, mate, but I haven't found a way to get into it, frankly.
No, I'm,
You
I'm
have?
waiting for this. No, monthly pivot would be my ideal spot here, and hasn't come back there quite like the trend line break here. Depending on where, again, it's difficult to know where these trend lines are when you get so many tails. It could be there, it could be there, it might be there, or maybe we're not looking at that as a starting point at all. It could be there. So there's a few sort of different potential trend lines, but when I see this kind of thing, my first thought is let's trust the lowest to start with and see what happens. It does look like it's bounced off this one, so it's possible that we are able to certainly omit the top one. Certainly omit the top one, but yeah, it's possible that it's either this just this one, or it maybe is this upper line. I don't know. That one looks a little bit cleaner because you got this little touch here, but I'd still quite like it down at the monthly pivot. And if it ran into the trend line while running into the monthly pivot, I'd be a bit more comfortable looking at a fib on it. It looks to me that yeah, there's not really a lot on the fib on that one. Let's just check the week. Last week's move. Yeah, there is a little fib on last week's move. Break into the upside. It kind of gets us right back to the 23% mark. So it does look like, that there could be a last week's fib, and that would suggest that the monthly pivot would be in play here for me. So until that's touched, I don't really fancy it, if I'm honest. But I do quite like it as a Lewis, no, I won't look at a short on the FTSE. Let's discuss that in a bit more detail. Have you got anything pending, mate, that you want to get to?
Mate, not till the US session. There's a couple. In fact, there's 3 trades that I'm looking at. Look, I'll share one with you guys, and I'll just pick which one. Which one is go? Well, let's go with dollar Swissy since you're talking about it. If you just want to go to the 4-hour chart, I'll give you the levels. Is that dollar Swiss? Can't be.
Do you mean the one that I'm on?
Yeah.
Yeah, this is dollar Swiss, mate. Yep. On the 4-hour.
Is that a futures chart?
No.
No.
Why? What you got?
A lot different to that. I've got a downtrend that's just been broken.
Really? Okay. Let me just check another broker. Just 1 second. Dollar Swiss.
I'll have a look on another broker myself. That's quite bizarre.
Somebody's not telling us the truth here, mate.
That's right.
Wonder if we can make money somehow on this spread somehow.
Arbitrage.
Yeah. Dollar Swiss. Where are you?
4-hour chart. Yeah, I've got the same thing.
I've got. Can I see your chart? Oh, the 4-hour you're looking at, right?
Yeah.
I've got the same on another broker on dollar Swiss.
Okay, well, take a mental picture of your chart.
Okay, I'm going to show you this on TradingView and see what that looks like. Yeah, looks the same, mate. 91,148, and this one is at 91,148. So it's the same. It's the same on 3. What broker are you on?
IFS and Fusion.
Oh, really? Well, your Fusion should be the same as mine. Can we see it?
Now it looks different.
Oh, that's convenient.
Yes, we can see it. Of course we can. All I need to do is press the right button here. Here we go. That one will do. There you go.
Yeah, that's the same.
Yeah, you're just a lot wider than me, that's all.
How dare you? So we got, you're at 138. Is this IFS?
This is IFS.
Okay, yeah. So it's a slightly different price on the.
Okay. So I'm going to trade this bar.
Yeah.
But it has to be black body, and the body has to be bigger than the tail. So it has to be a decisive bar. And if it is, then I will play it long here above the candle. And I'll probably put my stop loss under here, just underneath the monthly pivot. But that's the criteria that has to be met. And that is in 20 minutes from now.
Okay, so I guess we should talk about what we are looking at through the show. What is going to be happening?
Well, I'm also looking at dollar CAD, and I'm also looking at pound yen.
Fantastic. Okay.
Both
all
long,
right. Well,
but I won't give you any more details than that at this moment.
No problem at all. No problem at all. Okay, so we're going to be looking at potentially placing some trades during the US session. We'll also look at what is possibly driving the market, and that will lead me to Lewis. Are you in the US session? If you're not, then I'll answer that now. Hey, Dennis.
Interesting number on the Aussie this morning.
Very, mate. Very. I mean, it's a backward-looking figure. So because of that, I guess. Well, do you know what? I mean, it is interesting because if you look at the Aussie dollar, well, Aussie dollar maybe not so much, but if you look at the Aussie dollar, this is one of those backward-looking numbers that has provided some movement. But have we really seen the movement in the Aussie CAD looking pretty weak, Aussie Swiss looking weak, Aussie yen looking weak? So yes, we are. We're definitely seeing a bit of a hangover from that particular number. And interesting, I thought that was quite interesting, mate, because it's a backward-looking number, and yet because the Aussie was on such a significant rally to the upside, I guess there's probably a little bit of over-exertion and over-excitement in the Aussie, which has pushed it higher. So because of that, people are maybe recalibrating and rethinking their situation.
Yeah, I'm not sure on it, mate, to be honest. The numbers obviously not good. And it's the first official recession that Australia's been in 28 years. So it's surely significant. There's no question about that.
Oh, undoubtedly.
But relatively, if you look at the GDPs of every other developed nation, they're way worse than that, pretty much. So, on a comparative level, is it that bad? Is the question I have.
Well, I think that's a really good point, mate. Let's have a look at that in a bit more detail. I mean, we were looking at some things. We know September already. Just from conversations that we've been having, we know that September tends to be a pretty dire month in many respects before an election. So we are expecting some volatility to come in, and it lead me back to your question, Lewis. When we get into the US show later on, we'll discuss that in further detail. But yeah, let's have a look. So we've got GDP out of Australia quarter on quarter at -7%. Now they're expecting -6%. So even with an expectation of -6%, there was still some buying with the Aussie up until that particular point. But this would certainly question what why you would continue to buy the Aussie. But let me see if we can just do a filter here. Can we do GDP?
You know why the numbers, our charts look different?
Yeah, go on.
I'm watching a replay of this morning. Okay, hang on. That doesn't look right at all.
I thought there might be some
There's
kind
a
of
reason for
explanation.
everything, isn't there?
Yeah, it usually is. Let's have a look then. So let's see what we have got here. So GDP figures month on month. So that's not quarter on quarter, but month on month. That's
Where's your screen, mate?
Oh, sorry, buddy. You've got the screen, haven't you? Let's have a look.
Actually, I've got to give you control, so.
Oh no, I'm okay.
You can play the intro music later.
Oh yeah, of course. I think we're okay, but yeah, that'd be grand. So anyway, let's have a look. So GDP month on month and preliminary GDP quarter on quarter from the United Kingdom down 20%. So yeah, not as bad as Australia there. And we're really looking at the quarter on quarter numbers here to have a like for like comparison.
A measure of recession or otherwise, isn't it?
Yes, absolutely.
2 in a row. Yep.
Retail sales are there. GDP quarter on quarter -8% from the Swiss. Yeah, I mean, I see what you're saying, and actually, when you consider that, it would suggest that that any move to the downside, maybe with the Aussie, could provide a buying opportunity because of
that's the way I'm thinking. Yes.
Yeah, quarter on quarter. I mean, it's only one number, and it doesn't give us the whole detail. Do you know what was quite interesting about what's been going on with the Aussie? And I thought it was the let me just change the filter again. I thought it was the statement from the central bank I thought that was quite telling when we
Yeah,
started to see that.
interesting. I haven't heard that language before.
No, well, I mean, can you give us the overall tone of it?
Look, I don't understand what that liquidity that the central bank are offering the banks.
Yep.
To me, it sounds as though they're offering the banks as much money as they want to provide liquidity to anybody they wish to provide liquidity to, at a very, very competitive rate, let's put it that way, 0.25%, the same as the cash rate. And I don't get that, because to me that's going to create a problem. It's all right to dish it out at 25 or 0.25% interest.
Yep.
What happens when inflation hits and it's all got to be paid back?
Yep.
That's going to, down the track, it's kicking the can, I don't get it. And why is that?
Yes. Yes. Well, I
And if these
suppose.
banks are in trouble, as
Oh,
that
do you
would,
know, mate? I find this whole scenario a really interesting quandary for these central banks, because I completely agree. You know, what we've got is potential inflation kicking in, and here's the statement here: under the expanded term funding facility, authorized deposit taking institutions, ADIs, will have access to additional funding equivalent to 2% of their outstanding credit at a fixed rate of 25 basis points for 3 years. And I suppose they will want them to be, maybe paying it back within a year. And maybe that's the calculation here. But I agree with you. You know, what happens when inflation really kicks in? Are they going to be able to leave interest rates at this particular stage for the next 3 years? And you have to question whether that can be done.
Because, I mean, to kickstart the economy, you're going to have people investing in whatever it is. If it's property, if it's, whatever it is, they have to be buying something. And if they haven't got any money through lack of wages that they've suffered through the past whatever period of time that is, then okay, they're going to have to borrow, but they're going to have to be employed to pay it back. So to me, it's a very, very weird scenario, and I don't understand it. Never heard of term funding facility before in my life, to start with. And it suggests to me that the banks haven't got enough liquidity on their own behest. Yet in the next sentence, and I don't know that he says it here, the banks are telling us that they're still making billions of dollars in profit, right? So why do they need that funding?
Well, it's saying that there is a very high level of liquidity in the Australian financial system, and borrow rates are historic lows. Government bond markets are functioning normally alongside a significant increase in insurance. Over the past month, the bank bought a further 10 billion of Australian government securities in support of its 3-year yield target of 25 basis points. Since March, the bank has bought a total of 61 billion of government securities. Further purchases will be undertaken as necessary. The yield target will remain in place under progress is being made towards the goals of full employment and inflation. And that there really suggests that the Australian situation is extremely accommodating, and if they are willing to accommodate in that way, it wouldn't really suggest that the Aussie would be a particularly good play at this stage.
Although they're all saying the same thing, really, aren't they?
I mean, they are saying the same thing. Do you know what, though? And this is where it starts to get interesting. What does this say? Globally, the uneven economic recovery is underway after severe. The first path of recovery is highly dependent on containment of the virus. Or rising infection rates have been seen. A recent loss of growth momentum in some economies. By contrast, in China, economic growth has been relatively strong, which is why people like the Aussie, I suspect. In financial markets, volatility is low and the price of many assets have risen substantially despite the high level of uncertainty, which is very, very true. And I am seeing a pickup in volatility. So that's a kind of bit of a lookout. Bond yields remain at historic low levels. The US dollar has depreciated amongst most currencies over the recent months. Given the high commodity prices, the Australian dollar is appreciated to be around its highest level in nearly 2 years, which they probably don't want, really. In Australia, the economy is going through a very difficult period and is experiencing the contraction since. I mean, is it possible that he's not too keen on where the Aussie's sitting, and because he's laying it on pretty thick here? The economy is going through a very difficult period, and it's experienced its biggest contractions since the 1930s, and I suppose that's factual.
Yeah, the next bit kind of overcomes that, though.
Okay, so as difficult as this is, the downturn is not as severe as earlier. Okay, and the recovery is now underway in most of Australia. The recovery is, however, likely to be both uneven and bumpy with the COVID employment increase. Okay, so
that's negative, positive, isn't it? We'll call that.
Yeah, exactly. Yeah, the board is committed to do what it can to support jobs, incomes, and businesses. Its actions, including today's extension of the term funding monetary facility, are keeping funding costs low. So it's going to be who cracks first, and this is where when we look at it, because you're absolutely right. All these economies seem to be doing, all these central banks seem to be doing much of the same thing, and are accommodating, in the same way.
They haven't got a choice, have they?
No, I don't think they have. I think you're absolutely right, and I think that also with the situation with the Fed, being extremely accommodative, then you'd have to question what other tools the other banks would have if the Fed are doing what they're doing. But I think the big problem will come from the numbers, because what's going to happen if we continue to see things like this that we saw yesterday from the ISM manufacturing. Sorry, that's non-manufacturing. That is tomorrow. This was yesterday's number here. ISM manufacturing PMI is at 56. Now that's fairly substantial growth that we are seeing continuing to happen. Now, as you say, what will happen when inflation really starts to kick in and we have economic growth in the United States? Does that mean that they're going to be able to continue, or they're going to want to continue to be accommodating at these particular levels? You'd have to suspect not, which is why I think we need to watch these numbers very, very closely and get a gauge of whether the US economy is growing, because this is going to put pressure on central banks to do something else. I would have thought, I can't say with any certainty about anything, but I would have thought that would be the case. And if we see equal growth right across the board, maybe we don't have anything to talk about. But if we don't, then it would suggest the dollar may well move first and the US may well move first. And it all of a sudden starts to put the US dollar at a pretty attractive price point, considering where we are and where we have been. This is the current level on the dollar, the euro dollar. It is an SL zone. We are starting to see an economic pickup in the United States. Now, is that outpacing everybody else? Well, we'd have to have a look at the other numbers, but it's certainly looking pretty rosy right now for the recovery to continue. Now, when we look at this chart on longer term time frame, on a longer term basis, I should say, which we can't do on this broker, but have a look on your own charts on longer term time frames. In actual fact, let's not do that. Let's do it like this. And we'll actually look at the DXY here instead of the euro, because it will look pretty much the same. We change this to a 4-hour. Now everybody has to ask themselves on a month. Sorry, changing this to monthly. Everybody has to ask themselves: is the dollar index in an uptrend or a downtrend? And if you are of the view that this is in a downtrend, then it would suggest that this should keep going. But if you are of the view, like me, that this is in an uptrend, then this looks like a pretty attractive buying opportunity for the US dollar. And we've all been talking, about the US dollar going to going to going to the floor and getting there with some pace. But at this particular stage, looking at some of the economic numbers, that would be against what would be, I would have thought that would be against what would be sensible to assume. So surely we should be starting to look at the dollar on a long scenario. And if that is to happen, does that choke? Does it start to choke? What we've had going on, and if that's to be the case, do we then see some further downside with the Aussie as well? But I think you're right, Matt. I think the numbers are really, really interesting from Australia, but not, they're not awful, and we're going to need to keep our eye on this. But this certainly at this stage looks like a selling opportunity into 0.7020 to me. Before we start to see the potential buying coming back in. But for right now, I think we should be certainly looking a bit more closely at long dollar plays. And I don't know if you agree with that, but I think
I couldn't buy the Aussie right now for love nor money. It just doesn't make sense right now from both a fundamental and a technical point of view.
Yes,
it has to come back from both of those.
It would suggest that, wouldn't it?
Yeah. It doesn't mean it will. It just doesn't mean it just means that's what logically should happen.
Right, let's have a look at this,
logic
mate.
And trading mean absolutely jack shit.
Well, they can, yeah. So now we're getting just a bit more detail. What's going on? German retail sales negative 0.9%. Not suggesting some recovery there. Spanish unemployment rate still creeping higher at 29,000. Is that on the week? It looks like 29,000. That can't be right. I would have thought that's higher than that. Year on year, so we got Halifax Price Index. So that's the house prices slightly creeping higher in the UK. So UK looks better there. PPI's month on month from the Eurozone creeping slightly higher. But this is what we're really getting to. ADP non-farm employment change. Not a particularly good number there, mate. Not a good number at all. So it's kind of suggesting, when we've got the, we've got a disparity between numbers going on here. Labour productivity in Canada. Now, why is that bad? Why is that a bad number?
Wonder how they measure that. How did they measure that? Survey the
less than
employers, I suppose.
So the change in labour efficiency when producing goods and services, actual less than forecast is good. Productivity, I would have thought that would be the other way around, but so they want them to be less productive. I don't get that, but I'll have to read into that because that makes no sense to me. But anyway, it's coming.
In labour efficiency change. You'd think it should have a negative in it if it was bad news, wouldn't you? I'd like it should have a minus in front of it.
Yeah, that would make more sense. But either way, no big deal. So we got ADP non-farm employment change is the big one here. So it looks like we got a disparity between productivity, which we are seeing, which the Canadian number kind of doesn't really make too much sense. The manufacturing PMI is coming in very strong, and the labour force coming in very, very weak, would suggest that there may well be a bit of a gap forming between the labour market and I guess the people in the driving seat, because the number is in comparison to the last number. So we're seeing some growth, the comparative growth is coming through, but at this stage, it doesn't look like we're seeing it through the into employment numbers. It could even be that companies are getting more efficient, which would be an absolute disaster for the workers of some of these nations.
Yes, absolutely.
And and maybe we're seeing that come into play through the Nasdaq. Oh, anyway, mate, I've gone over time here. We need to get into the US show, don't we? And do our thing.
We do, and it's top of the hour. We got 4 hour charts to look at, which I'll be doing, and we may even place that trade. I'll have a look at that as soon as we start.
Okay, fantastic. All right, so join us in the US show. I'm going to stop the screen share here.
Thanks for
very
joining
much.
in on YouTube. We'll catch you guys later.
Yeah, catch you tomorrow morning, and if not, we'll see you tomorrow at 1:30 UK. And I will be flipping over to the